Morning, people. Morning. Um, man, look at this right here. Gold. Holy guacamole. Look at that pop. Right up to the 1272. And it's not even the right one. Pull it down here. Right up, tag that 2217. Just consolidating. I mean, that's the pattern. That's the pattern I talk about all the time. Pop the 1272, right back to the 100. And now, if it's going to go bullish, we're going to go right up here is the next move. Right there. What an awesome freaking move. I mean, wow. That that's pretty powerful right there. Pretty darn powerful. And I'm pretty amazed at sometimes by some of the stuff. Anyway, at even after the close yesterday, this was rocking on higher. This wasn't just on FOMC. Right here was the close, right there. And then after it reopened at 6 o'clock, shooting up even higher, consolidating up here. So that's pretty dang strong right there. Pretty dang strong. Now, what do I expect on gold? Well, probably after a move like that, I mean, that was a big move for gold right there. We're talking about what, 3% rally, 627 points. I mean, not 600, 62.7 points. That's yeah, I guess 62.7 points, but $62.7 per ounce. That's a strong move. And it's going to take a little energy to consolidate that and get the next move. But that's really nice. Really nice. Down there in Atlanta, hot Atlanta. I don't know how hot it is this time of year, but hot Atlanta. Nice to see you, Sledge. Eric, Larry, Dan, Wade, Ed, Donald, Robert, Infinity, Chad, Michael, Sergio, Simonborn, Jason, Cliff, Aaron, General Rush, good to see you, sir. Craig, Bob, Roland, Laura, good to see everybody. Laura, thanks for what you did yesterday. I appreciate that a lot. Delbert, Nikki, I appreciate what you did before too. And the team's going to get both y'all gift cards, I think, or something. They told me they're going to send you something. So, anyway, Darren, Rob, welcome everybody. Glad to have you. Jan, Al, Terrence. If you want to say hey, like everybody saying hey, then over here, click the button right down here. Be a subscriber on the channel. You can say hey, like everybody else, and we can talk about it. So, this is not a request show, just so you know. I do that on Tuesdays at 5 p.m. This is the Morning Monster. We kind of go through the morning markets and try to see what might be popping, what might be dropping, what might be the bias for the day. That's kind of the lay of the land for the morning show. And welcome everybody. We got Sledge, we got Major John, we got Rongamer, we got Carlene, Author, Ted, Chris, Anastasia, JB, Marianne, Ralph. Just love seeing everybody. Good morning, everybody. Salah. Yeah. It's too bad that, yeah, like, it was an awesome show, but I'm like bummed out that it's over now. So, anyway, good morning, everybody. So, that's gold for you. Popping overnight. Strong move. I mean, look, here was the FOMC move right here, right there. And then we did it again, basically, right there. I mean, that's pretty powerful. That's a pretty powerful move. This looks like a wave 3, then a 4, and we'll probably get that wave 5 pop, and then we'll consolidate again before we can go again. That's what that looks like on gold. Anyway, before we talk about too much more, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here intended to be informational, educational, fun, entertaining. It's not a recommendation to buy or sell anything. All right, no stocks, no options, no bonds, no futures, no forex, no cryptos, no treasuries even. Don't long them, don't short them, don't trade them. Don't buy stuff from gurus, especially if you don't trust them. Make sure you trust me if you buy anything from me. And if you want the roadmap line and any of the stuff I have, or come hang out with me later in Discord, link is in the description. Click the more button down below the video. Expand it out. It's like $5. It's the link in there. And you can be a supporter. And we've been doing this for 3 years now. 3 years I've been at this thing. And I thank everybody that's been along with me on the ride, whether you're new or old, or, been there with me since before I even launched. Some of you have. been following some of the stuff I do and trying to get better and better at this. Being a public figure, it's different. It's different than what I used to do. So I'm learning every day, and that's where this show comes from. If you desire personal financial advice, though, guess what? You got to hire and consult a financial advisor because that's not what I do. I'm just sharing what I'm doing. I'm not telling you what you should do. All right. That I don't know your financial situation. You're at a different point in your life than I am in my life. I can't take all your variables into account when I tell you something. So remember, nothing I say is advice. I'm just sharing what I'm doing. I'm usually giving blanket knowledge. Like book your profits and close your losers and don't stay in a trade when you're wrong. Like those are pretty universal smart things to do. All right. Now, we had the FOMC yesterday. They held steady. I gave it about a 60% odds of going higher yesterday morning, just based on the craziness that I was seeing in the futures. And sometimes I get it right. Crypto bouncing pretty strongly. I had a pretty strong day by the end of the day. My family's accounts up nice in the, let's see, what was it? Mid five figures, almost upper five figures. It was a pretty strong day. Didn't crack six figures. Usually in crypto runs, well, the last crypto run, I was cracking six-figure days fairly regularly. My biggest day ever, not crypto-based, was on the COVID drop, 856,000 in one day. But I'd love to see $1 million day sometime. Maybe I'll get there. Anyway, yeah, thanks, Terrence. Glad to know where everybody found me. Like I'm just curious. Like if you find me on, I'm particularly interested for people that found me on YouTube. Like if you saw me on YouTube the first time ever, you just happened across me. Like I put a lot of effort into doing this so that I can find people on YouTube. I'm just curious if you come in through YouTube, just give me a shout out and let me know. I know Nikki, I think, said she found me on YouTube by chance. It's just really neat to me because I put a lot of effort into doing the YouTube stuff. The press conference, Powell came in a little dovish, and maybe why did he do that? Like, I don't think they're going to be cutting rates this year, but he put a kibosh on the hawkish talk and kicked off more market rally. And I don't necessarily think that anything he said had to do with going up or down because I already saw it like in the positioning and stuff like that it looked like we were going long after the FOMC. It didn't matter what transpired. Maybe people in the already knew what was going to happen, but I don't know. I don't give credence to news affecting the market at all. And if you're new here, welcome to the conversation. I don't think that anything that gets said by any pundits or except for there's a couple exceptions. Like a company all of a sudden coming out and they're like, hey, the CEO got caught last night with a trunk full of drugs and a few ladies in the back, and she's going to jail for, forever, and we're shutting the company down. Well, that's the kind of news that's, pretty detrimental. But, most news has nothing to do with anything. Like FOMC, how does that actually affect the stock market? It doesn't directly affect the stock market at all. And when they do a rate change, it takes 2 years, 24 months for it to trickle through the economy. So reacting immediately, it's just ridiculous. Just ridiculous. And today, not a lot coming out. Not a lot. We had, unemployment claims coming in kind of in line. We have Philly Fed manufacturing coming in a little good, actually. Not dropping as bad as, Biden needs that number to come up, right? So the number came up. And just imagine that. Then we get some natural gas and stuff like that later on. Fed member Barr speaking. Watch those Fed members speaking after the after the FOMC because they could be more hawkish and create some volatility. Anytime we've seen them come out a whole bunch right after the FOMC, we've usually seen some volatility. And look who's speaking tomorrow at 9 a.m. right there, Fed Chair Powell. So we'll watch that one. That could create some volatility right as I'm coming on tomorrow morning. And found me through the Casey Stubbs podcast. Yeah, that was a fun interview. I had never. My boss used to work for Casey. I actually have a boss that I'm a contracted content creator, and I create trading content that we sell through a company. And the guy that's my boss, I guess you would say, used to work for Casey. And he's like, "Hey, I got this guy. I want you to meet him, and I think you two would have an interesting conversation." And Casey was like, "I want to interview you," and I was like, "All right, cool." And so I kind of laid out my whole trading story. And I still talk to Casey a little bit. So anyway, that's cool. JB found me on YouTube. Can't remember where you found me. Yeah, sometimes you just happen upon somebody and you're like, man, this guy got something going on. So anyway, that's the lay of the land for the rest of this week. And crazy enough, next week's the last week in March. Holy fudge muffins. We're like a quarter of the way done. Yeah. Remember from TGO and Top Gun Options? I still keep track of all that. I'm still a lifetime member at TGO. Much respect for Wiz. I've followed his stuff for a long time, since back at Trade Monster. Yeah, he used to do webinars on Trade Monster before it became Option House. He talks about being a whatever partner, launcher, whatever on Option House, but really it was Trade Monster was the beginning, and then when he was already, so I don't know how he was a partner of Option House, but he was already TGO when he was before that. So I don't know his whole story. Or his timeline. So, but yeah, I've been around a while. I bought a lot of stuff from a lot of gurus over the years. Some of them complete. I tell you, some people complete scam artists. Like big trends guys. Freaking don't care for them. Treated me not so nice. Dan Passarelli. I don't know what he's called right now, but I'm that guy. Straight up sharky, scammy dude. Micah Lamar, he's a pretty straight up dude. Wall Street IO. Next week, let's see. Doesn't look like we have a lot coming up next week either. Got some GDP numbers. That should be interesting. Wonder how baked those numbers are. Got housing sales, consumer sentiment. The first place I got involved in options was it called Trader's Edge or something like that? The Pirate. And I learned really quickly that not all gurus teach you what you need to know. And it's kind of funny when you get jammed up, nobody's around to help you get out of financial jam. So that's why I put together the community I put together to try to help everybody stay out of trouble. And if you get in trouble, for gosh sakes, come ask the community that I've put together. That's why I run it, to try to help you. Like if you do something goofy, hit the wrong button, got into something, got executed, got put shares, got called shares, whatever it might be, come talk to us. We'll help you get out of trouble. It won't be advice, but we'll tell you. I'll do my darndest bestest to help you minimize the damage. The best way is just to stay away from options expirations. That's unless it just gotten away from you and gone to zero. I mean, if there's no hope on the position, just let it expire. And to me, it's better than paying the commission fees most of the time. Anyway, different people have different opinions on that. S5FI. This is interesting how we had a strong candle yesterday. I'll pull this up on TradingView, but still well below 80 here. Well below 80. And I don't know. This market is, I would say, running hot. running hot. We have not had a 2% correction in like 97 days, 97 trading days. It's been like 147 calendar days. And there's my alerts going off, kicking off already. And this is getting wild here. We're due a pullback. We're in the top 4, maybe even the top 3% of moves, bullish moves, duration wise. Does this feel like the kind of environment that we should be in a top 3% of moves duration wise? Look at that. Hitting the targets yesterday. Beautiful. Beautiful upside. Rocking it all the way up to the 1618. Look at that craziness. Right to 5250. Now, next target's up. Quite possibly. Extend it on up. 5350. Would be another target up. Another target zone. If we go on up, I really expect some sort of pullback in here, but hey, NVIDIA, the largest company, right up here around 5,500. Quite possibly that's where we're heading. Quite possibly. So I want to apologize if I got anybody super bearish, because you need to be, I'm just warning on the downside, because at some point this thing's going to turn. It's going to turn fast. It's going to turn violently. But betting against a raging bull market is somewhat dangerous, all right? We could just keep being irrational. I've said that many times. Like, the irrationality can continue longer than you can keep betting against it. And I showed this right here. When everybody's talking about how we're all going to be rich because NVIDIA and SMCI and AI is, it's the next coming of millionaires, and we're all going to be super rich. Watch out for the rest of this, all right? This chart, it comes around. It comes around. SQQQ is going to keep grinding lower. We're going to keep going. I mean, why wouldn't it? NASDAQ at all-time highs. So just remember, market psychology, the disbelief. It's a cycle, and we usually make, in bullish markets, unless your company's going into the toilet, most of the time this low here is higher than whatever we had over here. It's not a full stop. Now, if your company's a piece of garbage, then you see these spikes, and usually it comes all the way back down, maybe even goes lower, especially in dumpster fire situations. But in companies that actually make some money and actually have something going on, when we do one of these pops and then we do one of these retraces, usually we're at a higher level here, and then we build the cycle again. So, that's, that quote comes from, it comes from the 70s. Couple other trader friends of mine claim they made it up, but that quote, "The market can remain irrational longer you can stay solvent," is a famous quote from the 70s. It came out in a famous trading book. I'm horrible with names and books and titles and stuff like that, but it's a famous quote from the 70s. There's several of them out there that get repeated and parroted, but if NVIDIA makes the run for that $3 trillion market cap, pushing it up to be the largest company in the land, be careful. We've seen this story, all right? It's the same thing. It's very clear in my mind, because Cisco, like, everybody knew the internet was going to run on Cisco routers. Cisco went parabolic right when I first started trading with real money. And it rocketed higher, became the largest company in the land, beating out, Microsoft at the time, I think it was. And then we woke up to the fact that the internet didn't really do anything for us. Just kind of like right now, AI, despite all the hype and hopium, and right now it's just kind of a fad. Like, it doesn't actually do much autonomously. Sure, it can help people that write. It can help automate some things. It can help make some decisions, kind of, but it creates some images. It does help me. I put out more things. I do the thumbnails. I can I recently bought a tool that summarizes my videos. I can put out more content faster, but if you're not in that kind of industry, like how does it, AI is not helping you drive right now. AI is not helping you go places. AI is not helping you anticipate, all sorts of things. It's not making you lunch. I mean, we're not to that point yet. So until we get to that point, until there's the actual killer app in AI, I think it's kind of hype. And once the music stops on the hype, we're going to see a retrace. Now, how bad is it going to be? Probably pretty bad. And it could take the entirety of the market down pretty hard on a correction. So when that happens, not sure. That's one piece of the puzzle. We also have this crazy debt situation. Now, the whole, I'm trying to think of how to say it. The whole situation with the U.S. debt, like the original concept is that you spend $1 of debt for the country. U.S. writes $1 of debt, lend it out, get it back. We invest that dollar in the economy, and we generate like 1.25 or 1.1. We generate more growth out of that debt than what we borrowed. Well, that's sustainable. You can keep doing that, and for a long, long time, the U.S. did that. The problem is when we got below 1, and actually right now we're at a 0.4. So we're only adding, like, for every $10 of debt we spend right now, we add $4 to the GDP. That's not sustainable. That's actually a debt spiral where you borrow more and more debt to keep growing the GDP, and the service on that debt grows. And there's only one solution to fix this and fix it quickly. That's inflation. That's the only Band-Aid. All right, you can cut spending, but it's still a huge problem. So cutting spending doesn't fix the problem. Inflating the debt, and it does tremendous fundamental damage to your economy by inflating that debt. And what you're doing is you're making the debt number small because the price of everything else exploded higher. You're increasing your GDP by orders of magnitude. It makes your debt look tiny. And that's the only real solution to fixing the debt problem. And, what am I talking about? Debt problem? It's this guy right here. And we're talking about, 34 trillion in national debt, but really we're talking about 213 trillion in unfunded liabilities added onto that. So that's the real crux of the issue there is, adding the national debt along with the unfunded liabilities, these entitlements for Medicare, Social Security. People paid in bajillions of dollars of Social Security, and then we borrowed it and lent it out to other people. And guess what? People expect their Social Security at some point. So, we're looking at $635,000 per citizen. I mean, I don't think on average we make that. In fact, if you look at the assets per citizen, we're underwater. We're already over leveraged here, almost 20%. So, crypto, the value of crypto doesn't just fix this either. So this is a problem that I don't know. I don't know what the solution is right now. Stop spending, but that's not happening. So anyway, that's the whole problem that's coming apart. And that's probably back to why this is doing this. Why is gold popping off like that craziness? Probably because we're spending money like there's no tomorrow, and there may not be a tomorrow, I guess. Just craziness right there. Absolute craziness. And ES reaching up to the sky. Next level's up right there at 53.20 would be the next resistance. Then we may take another multi-day retrace to the roadmap line. Well, I don't know. We'll see. Unclear at the moment when we're sitting at highs. All you can do is start booking and protecting profits. Here's NQ pushing right up into the all-time high. SQQQ, all-time low, right? The channel, if NQ wants to keep going in this channel, we're probably going to pop right up in this zone, right up around 19,000. It's entirely possible for NQ right there. Russell came back with a heater, but did not break out higher. In fact, rejected. That's kind of like a double top situation. Still not a very bullish pattern, although we may extend up just a little bit higher to the top of this orange box. Right back up where we topped out back here in April, possibly reaching up just a little bit higher, maybe. But the pattern, the way we're doing this, is not a bullish pattern. In fact, this may be what they call an ending diagonal on an ABC wave, and we may violently break lower when we hit the last straw. Very cautious there. Black gold retracing a little bit. That's glanced off that 83. I really want to see it turn higher off of this. I thought we might come down and retest that before we can push higher. 93 would be bullish. 92, 93, 90, and go on that scale. 85, 90, there we go. 85, 90, that's what we're looking for. Always got to remember to turn the log on or off. This one, not really moving more than $50, in a go. So log scale off. Looks like for the extensions here, 85-ish, maybe 86, and then 90 is really where I want to see it tag before we do a major retrace. Possibly go test this high up here. That would be interesting in my book. If I go, let's pull this up really quickly, go to a different chart, type up CL1, one exclamation point. Look at this right here. If we go off of this high, down to this low. That high was back in March of 22, 2 years ago. This big roadmap consolidation, a weekly time frame here. We've moved up, made a higher low, and we're set. The resistance is right here. Just looking at a bigger picture here. How fast we get there? We were messing around on the daily a minute ago. This is a weekly time frame, so we could be looking at a move right up here into the late part of the year. Now, I kind of went through this in the big bold prediction yesterday, and that's the resistance right there. Now, if we're to get above that, it flips the odds to 70% likely that we're going to see further up into this 150 zone. Possibly 170. That would hurt. We could do the classic pattern where we retrace back here and then go even higher. Like that. And this could go on an accelerated trajectory. I mean, look over here. We all of a sudden got hyped up. Entirely possible. We just all of a sudden get sparky. I mean, look, that was 1 week. 2 weeks. 2 weeks we went from 94 to 130. 2 weeks. So you don't think we can move fast all of a sudden. 2 weeks took us up there. Sure, you can blame it on whatever you want to. Look over here. We've done crazy before. All right? Oil can just get sparky all of a sudden. And especially after it sits idle for a good long while consolidating, we can just get sparky. So Don't bet against that one. I wouldn't bet against that one. It's been an underperformer for a little while. It was an outperformer back here. It's an underperformer here. We may see it come back to the top as an outperformer. Money rotates the sectors. All right, just throwing it out there. GC, of course, we've talked about that. Looks like we maybe exhausted the move for now. We touched the 1272, the 1618 up there around 2230 would be the next move up. Bitcoin came off the lows pretty strongly yesterday. I suggested that we might see that. We kind of tested back into that prior zone down there, dipped pretty hard, tried to push down, make a lower low. We did not. We made a higher low and then shot up. Was that on the FOMC? Now we've made a 1, 2, 3, 4, bouncing off the roadmap line. A 5 would be expected at this point, up into the 68, 69 area. Right around here. We can go touch that, retrace again, probably back down to the same area, and then go on a higher, bigger trajectory. Looks like what we're likely to do in the small time frames on Bitcoin. I usually hang out on the daily, but right now everything's moving fast enough that we have to jump down in the time frames to see what's going on. So there's a 1, 2, 3, 4. That'll be a 5. Probably a 3 wavy correction. Could go fast over the weekend even. And then we go launching off. If we hold the support and turn higher. There's things I don't say all the time. Anyway. I say it in my brain, but doesn't necessarily come out of my mouth. Ethereum has a similar but a little bit different situation going on. Can still be bullish and still take us higher. And Bitcoin, when you look at, that's the small pattern, but the big pattern, the bigger pullback pattern there, that low, that high, that low, 178, 180, 178, 78,000 and 82,000 are the upside targets there. So this one will probably take us right up in that zone right there where I've got 2 large ovals. Imagine that. All these things come together. And look at that. That was an echo of that prior pullback too. So it's just kind of crazy how this all stuff works. Anyway, Ethereum, like I said, can be bullish. We got to get above this breakout line, the 618 level. Then probably heading up to $44. We can go back up to the daily chart for that one. Dollar turned down pretty hard off of that 618 level yesterday. Now, here's the deal. I said we had to close above it. Need a close up above the 618 to be the entry. Now we've got 2 candles topping out there. If we go bust through it, probably coming up here to 105 in the short term. This is probably, we're probably talking into April. If we bounce down off of this again, that's kind of a 1, 2, and the third move down, run it like this. Third move down, we would expect right down here around 99. Why the 1618? Because that sets up an accelerated move for going lower. So if we break below here, probably heading down here. If we hold this in here, which at this moment in time, it's kind of a coin flip. We've bounced off the 618 here. We've bounced off the 618 here. We've bounced off the 618 here. It's muddy. All right. There's no high probability setup. And if we break higher here, we're going up here. If we break lower here, we're going more than likely going down here. More than likely going up here. It's just the odds of the thing. So right now it's a little bit of a coin flip as we sit in here with alternating color candles, green, red, green. What's moving today? ARGX, that's a biotech pharma, popping up, still below the roadmap line, and I wouldn't touch it. AVGO, and this could be a retrace on the way down to the roadmap line. Be careful. So what I would say, that's 1, 2, 3, 4, could be 5 if we turn back down. It did break below, broke below the downtrend or the uptrend of the lows, uptrend of the downtrend, no, uptrend of the lows. We broke down in, came back up, retesting. If we reject it today, watch out for that move right there. ASML. That kind of retraced almost to the breakout point. 1221 possibly on the upside, which is not the highest probability pattern, but we may run right up there. SMCI. Still got lots of dilution happening at 900. So Goldman Sachs underwrote this baby. They wrote however many million shares between 900 and 1,000 and gave that money straight to SMCI. And now they're going to offload them on the public every time price comes up in this zone until they get rid of them all. Until they make their money back. And so there's going to be liquidity in this zone for a little while. Between 900 and 1,000. Because that's what they underwrote. You may see it rally up at 1,000 and then all of a sudden it sells off. And you're like, what the fudge happened? Liquidity, baby. There's millions of new shares that got underwritten. And they're going to, like, Goldman Sachs is going to be trying to get rid of them and get their money back. Potentially even make a little profit, if it gets above 1,000. And then watch out below. MSTR, rocking on Bitcoin, coming back. Sayer buying another 9,000 Bitcoins. Next upside targets, 2,000, 2,500. NVIDIA, starting to look like the pattern. See that chop? I don't know. We could just consolidate and pop again. I mean, that's entirely possible. Entirely possible. Yep. I'm gonna remove these at this point. It's not even gonna matter. I don't have any open positions on NVIDIA. Watch out for that one to break. Maybe not today, maybe not tomorrow, maybe not next year, but eventually the AI hype is going to diminish. There's lots of competitors trying to make chips because NVIDIA is printing money with those chips. There's lots of competitors with their target on NVIDIA's back. Be very, very careful. ServiceNow. Looks like she wants to retrace. MU. Ridiculous pop right up to the extension. That's the 1272 of that big pullback. Could continue up 129 on the upside. FNGU. I'm not going to bet downside on NVIDIA right now. Like, it's highly likely we just go be the biggest company in the world. 1250. Consolidate. We break out above the high. We could be on the path to the biggest company in the world. How do you know when it's going to break down? That's tougher. I don't have any clear level at this point. Breaking below 800 would probably be a strong indication at this point. If we go higher, it's going to be a different number. It's that's irrational, rational exuberance, you might say. It's just irrational behavior. And if you bet on the downside, bet small. I mean, bet with money you could take out back and light it on fire. You could play something like MVDS. I mean, looks like it's going into the toilet. 1 to 5 split, reverse, MVDO. I mean, you can play smaller on that one, but that one's 2x leverage long. Cut against you 2 times. They just did a 6-for-1 split on that one. Craziness. ServiceNow, FNGU. New attempt at the high. It could go up to 357, 393, but eventually we're going to do one of these. Maybe not today, maybe not tomorrow. I bet sometime between now and August. I'm willing to bet. ILMN, that's bearish. We're popping, but holding that roadmap line is not bullish. That pattern, not bullish. Be careful. Now, can it turn into something bullish? It could. Right now, not bullish. It's not extremely bearish, but it's just not bullish. All right. The way it's overlapping and drifting lower, not the most bullish. AMAT. That one right there. What a pattern, man. Beautiful. That had a head and shoulders back here, and had I played it with enough time, that was rocking, man. We went from 100 to 200. I mean, that's almost doubling your money just on shares. Meta, where do I think AMAT is going to go? Well, it's consolidating here and likely to get a retrace, but we can extend. I mean, easily extend that one. 225, possibly 287. Meta. Yeah, it looks like we may just reach for the sky. 565. SMH. So far, making a lower high. I'd watch out for that one. SOXX, lower high. They really want to retrace. TSM, lower high. USD, lower high so far. You know, this pop we've got in the market could be the final pop on this move until we can retrace it. It could. I'm not saying do anything, all right? No advice right now. I'm just saying be careful. Have your levels. Move everything up a little bit. If you're long. If you're short, evaluate what you're doing, all right? Don't go short big. This thing could keep rallying. CDNS, just grinding out to a new high, but a little micro pullback. And we tap right at the tapping of the 1272. Unless we can get a bigger pullback, you know, we're just going to keep grinding these little extensions here on CDNS. AMD, that one's still looking like we're on the path. That looks like a top. We might get another little. You see it, right? That looks like that. Looks like that. We need this piece. Well, you don't have to. I mean, this piece could be a little fast thing, but AMD's probably coming back down. It's probably going to be bearish for a little while. Certainly if we break back below this. We glanced off of it so far. We may rally a little bit and then punch through. LABU. Interesting. We did that back test. Look at that. If we turn higher, probably rallying up to 220. IMVT. Bounced off the roadmap line. Did it. This is biotech, so be careful, but throwing it on here. Break above 40, could see 49. WDC. Nice. Got the downtrend channel, probably going for, excuse me. Probably going for the top of the downtrend channel right there at 70. STX. Where's the roadmap line? Still calculating. There it goes. I was like, come on, where's the roadmap line? Didn't quite make it down. It bounced right off the resistance. That was the head and shoulders target. Crazy. Sometimes these head and shoulders work. Like, look at that one. Especially when nobody's talking about them. That one worked out right to it and retraced. The next move up, probably going to break out and extend. Or we could retrace deeper. See that low right there, that high right there. Support down here. May want to revisit that 75 area before we can go higher again. VRT, yeah, parabolic. One day it's going to end. Yeah, they can go parabolic for a while. You see it, right? That curve. Look. snow. Still expecting that one to make a lower low. It made a substantial progress. We just need a little bit more. I'll be looking for an entry. GES. Crazy pop. Apparel and footwear. Guess. I know Guess jeans. I don't know about Guess footwear. Maybe that's the thing. 35 on the upside. 41 above that. Not a big mover. Coin. I really want to see this one retrace, but it doesn't look like it's going to. May just keep extending. That resistance right there is what we got to get above to go up to these targets up here. I'll probably be interested in taking a position above there, but until such time as we get up there, I need a retrace or I got to wait for it to get through the resistance. ALB, ALAB, one candle, doesn't tell me a single dang thing. ARM is doing that retrace pattern. I'm telling you, like, watch out for this one. Everybody sees this, right? It almost exactly looks like this. We did a crazy pop, doing the consolidation. Just needs some time before we do get another pop. Watch out. BA. That could have been the bottom, but I'd like to see it push just a little bit lower. I really would like to see it tagged at 170, maybe even just a little bit lower area. I didn't know they were going to have problems, but I did warn that was probably a top. And I drew a big arrow, and I drew another big arrow that goes way on up here. So if we can find support right in here, we could turn this baby around for a good long rally that lasts a couple of years. ZS, right to the roadmap line. That's what I expect a lot of semiconductors to do. $237 for $278. Otherwise, just wait for it. There's no aggressive entry at this point that's worth taking, I don't think. I mean, maybe you could grab something above 210, but you might lose your money. That's where this bottom happened over here. You see these, it's a flip point. That's what I call it on the chart. Try to line it up. See that high right there, that low right there, that low right there, that micro consolidation. If we break back above that, that could be an aggressive entry. Above 210. Looking for the move up to 278. Marvel. Almost to the roadmap target. Be a shame to miss it. CMC. Commercial Metals Company. That was popping and retracing, I guess, on all the metals. Copper and gold and silver and all the metals were popping yesterday. Let's see. Dang. Forget my copper ticker all of a sudden. HG. That's why I couldn't remember. That's not a big pop. I don't know what somebody was saying. Somebody was saying copper was popping off yesterday, but that's not a popping off. It's a potential 1, 2, 3. And it may lead to a deeper, and oh my gosh, that looks pretty. Look. 1, 2, 3. This may burn down. Oh my goodness. Oh my goodness. If copper breaks back below that low or that line, probably going down here. Man, oh man. There we go. Put myself notes in the alerts so I know what the alert was for. Jump back over to the morning monster list. I've been going a little while. All right. What was I talking about? Commercial metals. Let's see. That's a kind of a long term. Like that's a major resistance there. Look, it has not been able to get through that level for a year. For a year. I mean, maybe longer than a year at this point. Major resistance. If it can close above there, that's positive, but it may not be able to do that. Steel, RMBS. Well, above 68 can take us to 82. Decliners 5 below, went below the roadmap line. That could be bearish. The immediate target potential right there in that zone right there. And if we start getting below that, we can make a lower low than we made back here in September. ACN coming back down to the roadmap line. That's pretty strong. That low, that high. If we get below the roadmap line, support just below it too. TRML, Tourmaline, Bio, sounds like biotech to me. Reverse splits. Reverse splits aren't bullish, even if the stock moves that way. Watch out for it to go lower. Well, it's not going negative. Let's see. Yeah, what a move. It's so funny. That move puts the fib negative. They're so far down, it's going to zero. If it fails here, it's not looking good. Not looking good at all. It's a dumpster fire. Oh my goodness. DRI. Made it all. Glad to see you, Kevin. And DRI. Yeah, Oracle's. It's funny. Oracle making an all-time high. Oracle should be pushing up into this list. Let's see, where was it? I don't even see it on here. They're talking about Oracle pushing into the top. Maybe joining the $1 trillion club. I don't know. I saw a lot of articles about it. Oracle all-time high. Yeah, this is supposedly a new AI play. Kick Tesla out of the Magnificent Seven and then put Oracle in, and here's the potential path. I don't know. People just like pundits need stuff to talk about, I guess. You know, we're 363 billion in market cap. It's going to take 3 times the price to put it in the $1 trillion club. Could it do it? I guess. I mean, yeah, fair looking chart, fair looking numbers. Carrying a buttload of debt, $95 billion. So that could go from 100 to like 3x it, 130, 390, $400 basically. Put it up here. If we go to the $1 trillion club, don't bet against the market. The market could do this. Like, you know, maybe that's worth buying some leaps out to 2026 just in case. Just in case they do some ridiculous stuff. Go buy some like $150, $200 leaps. I don't know what's available. Yeah. Well, I mean, you heard. Everybody should know that. It was big market news. See the splits right there on the chart, 50 for 1. ASO, Academy Sports and Outdoors, took a big drop, almost back to the roadmap line. A little bit lower would be what I want to see. And then we got to move up through 70 to get 79 and 84. Shake Shack needs a retrace. That targets LI. Get smacked down if it continues the pattern. Like, we're just in this giant box and probably going to retrace back down. PDD rejected the potential. Golly. Felt like a piece of fuzz went up my nose. PDD right there rejected the potential entry. Not good. That may go on extension lower here, back down in this area. CTSH. Back to the roadmap line. See, that sets that up that high, that low. Above 77 could take us up to 82. Seems like I've said those numbers before. DBI. Designer Brands is taking a dump here. That low, that high. It's like $7 is the next downside target. Could save it here, but watch out for the drop further. Bias for the day is caution. We could just turn sour all of a sudden. Now, I'm not going to bet against the market right now unless it starts turning sour. So watch out for something turning really sour. We could go one more little dip and rip. So, all right. I'm going to go head over to Discord. If you got more you want to talk to me about, I'll be in Discord. Links in the description. Click the more button. $5 if you want to join me there. Otherwise, have a great day. I'll be back tomorrow. I'll see y'all later. Same bat time, same bat channel, 9:15 tomorrow morning. Be safe out there.